again, everybody. Welcome to today's episode of the Daily Dose. Today is Tuesday, January 24th, and it was another interesting day on the stock market. Very exciting if you like technical analysis, because I thought that the markets continue to act in line with the technical analysis that we've had on our charts. So if we take a look at what we had today, obviously we had a candle that came and touched the bottom of this zone, which is now acting as support. And really it came and tested the 4,000 and it bounced off of that. So that's two consecutive days now where we're confirming we're closing above the 200-day moving average and we're above the trend line. And that for me is a really, really bullish sign. Now I know that the Fed is still talking about hiking rates and keeping them high, but we are starting to see signs that the economy is slowing and that inflation has peaked. Now, this Fed has made it a point that they don't want to make the same mistakes that the Fed made in the 70s that ended up turning into decades-long inflation. And basically what happened is there was really high inflation like what we had now. The Fed hiked interest rates, inflation started to come down, and then they eased too early. When they eased, inflation went back up. There was a second spike, and then they had to come in and really hike interest rates. I think interest rates were somewhere around 15% or 20% or something crazy. Something that we have not seen in a very long time, and something that really shocked the markets now, and they don't want to have to do that. So I think it's a really interesting situation because the technicals on the S&P 500 on the stock market are telling you to go long, but there's still a lot of fundamentals out there that are telling you that there might be some more pain in the economy. So what does that tell me? I think that it's good to be a long-term investor. Again, throughout this whole entire bear market, I've said that even God can't beat dollar cost averaging. It's really your best friend, especially in a time like now where really the market could go either way. And that's really what I live by. I'm never trying to make investments that involve timing the market. Obviously, I still always have dry powder on the sideline in case shit really hit the fan. But in reality, all my accounts DCA every month, and I don't even really pay attention to it that much. So, yeah, I think it's definitely a time not to really go all in and buy into the FOMO, because you still have the possibility of the Fed taking these markets lower, but it's also not the time to sit out and wait for either this low or a new low to come into the market. I do really quickly want to talk about Microsoft's earnings that came out after the close today. They just missed on revenue. They beat on their earnings per share. They beat on productivity and business processes. They beat on cloud, and they just missed on personal computing. But overall, the market liked this earnings report, as it's up around 4% after hours. And the one thing to point out is that there are signs that Microsoft's cloud business are continuing to slow. Its intelligent cloud segment grew 18% in the quarter, while its Azure services grew 31%. That's down from quarter two last year of 26% and 46%, so the growth is slowing, but those are still great numbers, especially in this economy that we're in right now. And then they continued to announce that they're investing in OpenAI, which is ChatGPT, and that's a really groundbreaking software in the AI space. And I think it's really going to help boost Microsoft, especially against their competitors like Amazon and Alphabet. So let's get into Bitcoin really fast. Bitcoin continues to look really, really strong. It is bowling higher like the S&P 500. It broke through both of these ranges that we had been in. and now it's kind of looking towards the 25,000. I think that that's going to be a really big resistance for it, and if we break through the 25,000, I think we're well on our way to the 28K, to the 30K. So Bitcoin's looking bullish. Again, I still am watching this level, the 12 to 9,000 on Bitcoin. I definitely don't think that it's impossible still to get there, but obviously it's looking a lot more bullish at this stage. So it pays to be more optimistic in markets, and again, it pays to dollar cost average into any asset class, including Bitcoin. So I won't take up too much of your time. I'm gonna leave it here. I hope you took a little bit of value out of today's episode, and I hope that the markets have been treating you well. Again, thank you for listening to this episode. Please subscribe on YouTube and follow wherever you listen to podcasts, and I will see you in tomorrow's episode. Thanks.